First thing to think about is $10 million Bitcoin means roughly $200 trillion market cap for Bitcoin. If you look at kind of world money supply right now, global M2 global M3 is $150 trillion, right? Now that's going to grow. So that'll grow to 300 trillion in a decade. And I think there were Bitcoin 10 million, we're kind of realistically looking like 2 decades. So it's going to grow to about 600 trillion. So even then, Bitcoin will only represent a third of global money supply, but it will probably be bigger than the US dollar by then.
What would it mean for the world if Bitcoin hit $10 million? Not just for investors, but for governments, currencies, and the way we think about money itself. At that level, Bitcoin wouldn't be an asset you hold. It would be the reference point, the measuring stick. Your house, your salary, your national GDP, all priced in sats. Fiat wouldn't vanish overnight, but it would be dethroned, slowly pushed aside by a system that doesn't need trust, permission, or monetary policy. Just code. Fred Krueger sketches out this vision with brutal clarity. At $10 million per coin, Bitcoin commands a $200 trillion market cap, possibly outpacing the US dollar in global relevance. But even then, it wouldn't dominate the financial system entirely. In his forecast, the total money supply 2 decades from now balloons to $600 trillion. Bitcoin would sit at 1/3 of that. Not everything, but everything enough to reshape power. The shift wouldn't be just financial, it would be cultural, generational, and irreversible. This isn't just a price prediction. It's a scenario where Bitcoin becomes the backbone of a new global order. The question isn't whether it's possible, it's whether we're remotely prepared for what comes with it. Stay tuned as we bring you more clips from Fred Krueger's explosive interview. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video.
So I do think that, we're looking at a world at which Bitcoin is going to coexist with the dollar, right in the United States, right? It will coexist with the dollar. And I think even worldwide, it'll coexist with the dollar as the means of settling international transactions. So I think you have to start there that we're going to get to a point, in 20 years where we're going to have, Bitcoin will be part of the equation. I don't think it'll be everything, but I think it'll be part of the equation. And I do think that a lot of people are going to start to denominate things in sats. And I think that's really where things get interesting.
How are you thinking about, does $10 million Bitcoin mean hyperinflation?
No, I don't think it does. It might, right? There's some chance. There's always some chance of hyperinflation. I wouldn't say it's like a 0% chance. It's not on my bingo card, really, for what's going to happen in the next 2 years in America. Although, could we see sort of 1970s style inflation? Yeah, very possibly, right? We could see 10% inflation, 7 to 10% inflation. I think when you're dealing with inflation, you really have to ask yourself, as Michael Saylor said, it's a vector, right? So it's there's no one inflation rate. And I think specifically, if you're looking at the inflation for a college student, right? Well, they're going to need the price of a Big Mac, right? The cost of, rental unit somewhere, right? And those things I don't think are going to go much beyond 4 or 5%. So I think there's some case to be made that real estate might demonetize in the favor of Bitcoin as an asset class, because it can only grow. Right now, we're pushing out these kind of valuation metrics like real estate to income levels.
Yeah.
Right now, that's 8 times. I don't think you get to 20 times. You know what I mean? People aren't going to buy a house and I have to spend every dollar I make for 20 years to buy this house. Maybe if there was no alternatives, yeah. But I think people will be, no, I'm going to buy Bitcoin rather than buy that house at 20 times earnings, So I think we're getting to these very stretched valuations in some of these assets. And I think stocks is the same, right? I mean,
Yep.
as you use stocks in a portfolio, you're basically implicitly increasing PE ratios unless the earnings go crazy, right? But the PE ratios are also going crazy high, right? So, I think that's going to put a little bit of a cap on some of the other assets, the two ones being, real estate and stocks. And then, I think bonds are just a terrible story kind of for the next couple decades. So I do think there's going to be growth away from those assets into Bitcoin. So I think Bitcoin's going to take a bigger and bigger chunk.
Mhm.
But just given the size of the fiat system, it's still not going to be the majority by any means. I mean, it's still probably single digits, even 20 years from now. So I think that's, that just tells you how early we are, that you can sit there and say, I think we're going to be at $10 million Bitcoin, and yet Bitcoin's going to be less than 10% of the world's assets. The way I look at it is there's certain massive changes that are immediately obvious to the person. So, for example, you sit somebody in front of ChatGPT for an hour, and they become immediately aware that there's something magic going on, right? The same is sort of true with like the internet. You put somebody in front of a browser in 1995 and you say, hey, go to town on Netscape Navigator. And they're like, wow, this is amazing, or even Instagram, it's like, wow, I can take pictures of myself and upload them and apply these filters and share them with all my friends, I think Bitcoin is a lot harder to sell, okay? Because I think if you say to somebody, here, you can transfer this, you can put your money in this address. Oh, it takes 10 minutes to confirm. And there's this long, not really very human friendly, address. And then you need to store it on a hardware wallet, and you need to make multiple copies of different keys. And then you need to like maybe engrave them on a steel plate and put them in a vault. I think most people are like, I'm doing this. Why? Oh yeah, but you can send it to somebody. It only takes 10 minutes per transaction at minimum. Maybe it could take an hour. They're like, this does not seem like a technological, it's not a technological no-brainer like AI is or the internet. So I think, it takes a while to realize, oh, and then by the way, there's, a million other cryptocurrencies that are competing with it. So, part of your brain is like, well, isn't this just like MySpace and Facebook? And there's going to be some new one that's going to take over Bitcoin. So I think there's a lot of reasons why Bitcoin is not as obvious as other tech changes in the world. So while it is true, it's not happening that quickly. The adoption for Bitcoin is even slower, right? So the adoption for Bitcoin is growing at about 15% a year, right? If you look at the power trend for new addresses, right? So how many new people come to Bitcoin? Well, it doubles every 4 years, 3.5, 4 years. That's, if you keep tabs on it, that's pretty big, right? So it's maybe 50 million today, I think, the way I look at it. Maybe it's 100 million 4 years from now. Maybe it's 200 million 8 years from now. But, that's not like Instagram. Instagram went from 0 to 1 billion in 2 years, right? ChatGPT went from 0 to 1 billion daily users in like 2 years, So, we're dealing with a slower adoption circles thing than any of these other things. And I think people are nervous, look, they're nervous about entrusting their nest egg that's taken them decades to make, they're nervous about entrusting it to a completely new piece of technology, right? So the adoption rate is slower. And I think, it takes a couple years really of holding Bitcoin before you're really comfortable enough to kind of, at least for me, before you're comfortable enough to tell your dad to say buy it. You know what I mean? It's a slow process. So I think doesn't mean we're not going to get there or anything. It's just, we're going to get there slower than than all of us want it to happen. And it's still fast, right?
Yeah.
It's still really fast. I mean, Balaji had this statement that, when history book looks at it, they're going to be like, one day Bitcoin was invented, and then just seems like just next day everybody was using Bitcoin. But that period is going to be like 40 years in between, right? But, from creation to full monetary takeover, 40 years, that's pretty good. That is and Bitcoin is the fastest asset ever to go to $1 trillion in market cap, so, it is happening really, really fast. People are front running it. So I guess the answer to you is people are front running it. That's why Bitcoin is doing it. It's just, and what I think with the power law is just it's the statistical measure of the speed of how people are doing it.
Yeah.
They're doing it at this viral rate that is, currently about 40% in terms of price and about 15% in terms of addresses.
Bitcoin isn't obvious, and that's the point. While flashy tech like AI goes viral overnight, Bitcoin demands time, trust, and conviction. It's clunky, slow, and hard to explain at first, but that's what makes it resilient. People aren't ignoring it. They're cautiously adopting it, one family conversation at a time. As traditional assets stretch thin, capital is quietly rotating. Bitcoin won't replace the dollar overnight, but it is carving its lane, and those who get it early aren't waiting for permission. In a world priced in Bitcoin, business as usual collapses. Companies can't print growth. They have to earn real value in a system with a fixed supply. Real estate, stocks, even wages start to lose ground in satoshis. Lending breaks down. AI automates faster than we can adapt. But beneath the chaos, there's a path forward. Bitcoin becomes the anchor in a storm of economic and societal change. Hold it long enough, and it just might carry you through. Let's watch more clips from the interview.
By definition, there's only 21 million Bitcoin. If one country has growth in Bitcoin, then another company has a loss in Bitcoin. We're entering a zero-sum game. So you can't have companies that make Bitcoin unless somebody else is losing Bitcoin. So it's going to be very tough to make Bitcoin, right? Now, again, you don't need to make it because your Bitcoin is becoming more valuable all the time. Right? You could actually lose Bitcoin. You can have negative Bitcoin growth and still do great, right? Your standard of living is increasing. The purchasing power is increasing. It's going to be a rare company that actually makes Bitcoin, right? It's going to be really tough. I think right now it's not the bar to making fiat return is not that hard. The bar to making a Bitcoin return is going to be very hard, which sort of tells you that that's where you're going to have the problem, right? Is how do you make a Bitcoin return? How do you justify a lot of companies out there, right? In a world with fixed supply. If the thing that's measuring it is fixed supply, how do you don't, right? And how do you justify lending Bitcoin? You got an asset, a house, and somebody says, "Well, great, I'd like to borrow some Bitcoin against my house." Great. Well, your house is depreciating at 5% a year in Bitcoin terms. You want me to give you a down payment and you're gonna pay it back? How are you gonna pay it back? Right? The collateral is going down, way down, right?
Yeah.
So and probably wages are going to go down in Bitcoin terms too. So if I say you got to pay your mortgage is, I don't know, let's just say your mortgage is $1 million sats a year. Well, how do I know? Right now you can make $1 million sats a year, but 10 years from now you're not going to be able to make $1 million sats a year, right? That's a lot.
Yeah.
So I don't know if I can lend it to you, Joe. Like $1 million, that's a lot. $1 million sats a year, I can't lend it to you. I'm going to ask a really high interest rate, and it's going to be really hard to qualify for that, especially with this crap collateral you're giving me that's losing 5% of value. Right? I mean, in a decade, your thing's worth half as much. I could repossess the house. Great. I get half of my loan. Right. Yeah. So I feel like I think lending is going to be really challenging. I really feel like the housing market is going to completely change. Right. And you realize, and I think the same thing is true with stocks. I think so much of the stock market and the housing market is just an illusion that's based on money growth. When you take the money growth out of it, it's like a lot of stocks return zero, net of money growth. So why do people store their money there? Well, they could just store it in Bitcoin. You know what I mean? But that goes to a bigger question is, with AI, a lot of human activity is probably not worth investing in. Right? Like, we're kind of not that useful. Ultimately, the machines are going to be useful, not us. How do we get paid? Well, you got to tax somebody. So tax the machines, right? Don't tax rich people, just tax the machines. They're going to, put an AI tax somewhere, but that's going to disrupt the whole fabric of society. We're kind of getting into a more of a socialistic model. That generally doesn't work very well. People take advantage of it. So, I think all this world I think it's inevitable, right? Because I think Bitcoin is inevitable, but I don't think it's all positive. I think there's a lot of negative things that go along with it. I can say if you don't have Bitcoin, you have the chance of something very bad happening to you is high. With AI, the advent of AI, you have a very good chance of losing your job in the next 10 years, right? Unless you work as a plumber. And I'm not even sure if that is 100%. At some point, we're going to have these humanoid robots that are going to do plumbing jobs, but you might want to get some in case it catches on. It's kind of, the thing Hal Finney said. But, I do think that it's going to be extremely challenging dealing with this, where this takes us as a society. And the other thing I think about AI is whether it's the left or the right that is in charge, they will know everything, right? So we're going to have an era where you're not going to be able to hide, really. You know what I mean? So, they're going to get you no matter what in terms of, even spending your Bitcoin or whatever. They're going to get you. But I do think that, right now getting your Bitcoin could be kind of the lifeboat to this transition. And then ultimately, I think it's very positive, right? Like ultimately, I think, once we transition to the new world order where the machines are doing all the work and we have the stable monetary system, I mean, it's great. That's a great place to be. And that's, I just think it's going to be we've never gone through anything like this. So any historical analogs are not, they're not accurate. Like a lot of people say, well, the Industrial Revolution, they said it was going to put everybody out of work, but everybody found jobs. And it's true. But maybe this time is different. Maybe this time actually we do have major problems with it. On the other hand, maybe AI just creates so much abundance and wealth that that counterbalances things. So either way, I think as an investor, you're going to do incredibly well if you can manage to hold on to your Bitcoin in the next 20 years. Look, there's this mantra of 60-40. It makes no sense to me because if you look at the historical returns, Bitcoin's winning in 8 out of 10 years. Where is the science behind that 60-40? There's no science, This is like the science behind bloodletting or something. There's no science there, it's just, but people, there's, hundreds of thousands of financial advisors that are just parroting that stuff. And so I think it's, I think most people will get it wrong. I think most people are going to get it too late. And when they do get it, they're going to be they're going to think too short term, and they're probably going to get caught up with too much leverage, like they always do. And so, I just feel like that model is wrong. The 60-40 model is just an incorrect model. And I think stocks are going to underperform.
Wall Street's move into Bitcoin is no longer speculative. It is becoming a full-scale transformation. Major financial institutions like JP Morgan, Goldman Sachs, BlackRock, and Fidelity are not just exploring crypto, they are building infrastructure around it. Trading desks, custodial services, tokenization pilots, and exchange-traded products (ETPs) are rapidly becoming part of traditional finance. Bitwise now projects that every Wall Street firm will be involved in crypto within the next year. Their bold forecast of Bitcoin reaching $1.3 million in 10 years reflects this deepening shift. This momentum ties directly into what Fred Krueger has emphasized. In a world with a fixed monetary base like Bitcoin, value cannot be printed or expanded. It has to be earned or preserved. This changes everything. Lending becomes harder, because collateral like houses and stocks begin to lose value in Bitcoin terms. Earning becomes harder, because wages may not keep pace with Bitcoin's deflationary pressure. But holding Bitcoin, quietly and patiently, becomes the most powerful financial move one can make. As institutional players dive in, the system itself starts to tilt. Tokenization of real-world assets is making markets more efficient. Regulatory clarity is giving cautious firms the green light to participate. Yet, this is more than just a tech upgrade. It is a monetary reset, a system where value is no longer inflated away, but protected by code and scarcity. Wall Street is not just adopting crypto. It is adapting to survive in a world that is slowly being repriced in sats. Those who understand this early will lead the next financial era. As we wrap up, if Bitcoin hits $10 million, what happens to real estate, stocks, or wages in your view? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.